In this video, I'm going to be going over another ICT strategy. And if you have an eye for it and you can have the correct entry, this could be another very powerful strategy. This one is called the Unicorn Model. All right, let's get into the video.
You take the red pill, you stay in Wonderland, and I show you how deep the rabbit hole goes.
Alright guys, welcome back to another video with Red Pill Trading. Before we get started, go ahead and smash the like button, subscribe to the channel, and also leave a comment down below. Let's go ahead and dive right into it. So this is the Unicorn Model. And what you want to be looking for with this particular model: a low, a lower high, and then a lower low. After you create this lower low, if we immediately trace back up and we make a higher high, breaking through that lower low, we're going to mark this area up. How we've talked about before with order blocks, right? Last bullish candle, creating this order block. That would be an order block, correct? When you break through that, this is now a breaker block. That's all a breaker block is an order block that has been broken through. So as we create this higher high, and we also have a bullish fair value gap that is overlapped with this breaker block, that is your classic unicorn model. So all you'd be looking for is this kind of formation: a low, a lower high, lower low, higher high, breaker block, fair value gap. Okay, now entries are going to be different for everybody depending on your risk tolerance, but I would always recommend that you enter near consequent encroachment. Okay, that's going to give you the best risk to reward, as opposed to entering on the breaker block, at the tip of the breaker block, or at the tip of the fair value gap. Because a lot of times when you see this exact formation, you're going to see that it likes to trace back into the fair value gap, at least a little bit. As you can see right here, we tapped into the breaker block, retraced away. We have this as our liquidity target area, right? As we were coming down and doing all this, we came up this high, never gave us our entry, kept tapping the breaker block, made this other high, came back down, boom, we finally tapped into the fair value gap, messed around for a second with some consolidation, and then boom. Now, if you look at this, you cannot tell me this is not like clockwork. Consequent encroachment, fair value gap. Look where that wick is at. It's literally kissing consequent encroachment to the tick. Okay, came down, bearish, kissed consequent encroachment, and then shot up. We would be targeting the highest that it has gone to before we tapped into our entry. Okay, so with that being our target, we would enter right there. Enter at consequent encroachment. Stops is going to be, if this is correct, right? It should be respecting this. So we don't anticipate the price is going to run through this fair value gap at all. It should be respecting consequent encroachment if this is 100% correct unicorn model setup. Okay, so you can feel safe to place your stops right below the fair value gap. Now, if you really wanted to, you could always do the classic of putting your stops right below the formation that started the fair value gap, or really all the way down below the lower low. Okay, but if it's running down this far, breaking through the fair value gap, and especially breaking through the formation that started the fair value gap, chances are this is a failed setup. Okay, so easiest and best risk to reward is going to go right below the fair value gap. Okay, targeting the last high, which is going to be right here, and look at how much you're getting off of this trade, a 1 to 8. And these happen all the time in the market. Just like the turtle soup setup though, you have to have an eye for it. You have to be doing some back testing, practice this setup. If you do have an eye for it and you start to catch these, this setup is so powerful that even when you do take a loss, if you're catching setups like this with a 1 to 8, you literally need to lose 8 times in a row before breaking even. And if you're only taking A+ quality setups, you should not ever be losing that many times in a row. That's why discipline, waiting for the market to come to you, is exactly what you need to be doing. Wait for the A+ setups, let the market come to you, be patient, and with the correct entry, you could be getting trades just like this one. But anyways, guys, that's gonna wrap it up for this video. If you guys are interested in joining the Discord, the link is in the description. Be able to chat it up with like-minded traders. We go over strategies, also do some live trading in there. I will be starting a signal service here soon. If you guys have any questions in regards to this model or any other videos that I have posted on the channel, be sure to leave those down in the comments below. And I will see you guys in the next one. Peace.